This is RozarasInvestments. Thanks for watching, thanks for subscribing. Today's video is a head-to-head competition between Weibo, the Twitter of China, and Twitter, the Twitter of America. So, there's a lot of talk about trade wars and tariffs, and I think, it is my hypothesis, that Chinese companies are trading at a huge discount to their American counterparts because of all this tariff talk. So let's go into the numbers. So Weibo, which is a company that I'm actually thinking about investing in this morning, and as I was dropping my daughter off, I was thinking I'm going to buy a boatload of this. So before I do, I wanted to compare the two companies head to head. So first, let's look at market cap. Weibo, 19 billion, Twitter, 26 billion. So in general, I would prefer to invest in the smaller of the two companies because I feel like that it's easier to grow. So at a $19 billion market cap, Weibo would be considered the smaller company. So why is it the smaller company? Let's look at the number of users. Weibo has over 400 million users. Twitter has over 300 million users. So Weibo actually wins in that category. Now, how many new users are they gaining? So Weibo has gained over 70 million new users, and Twitter, which just came out with this earnings report this morning, has lost 1 million users. So Weibo gets the check mark in total number of users and user growth. So how is their revenue growth? Weibo has revenue growth in the 80% ballpark. Twitter, which just came out with this numbers today, is growing revenue at a respectable 24%. But if Twitter is losing users, how long can that growth last? I heard the reports from Jack Dorsey on the earnings call, and he keeps mentioning the health of the company and kind of cleaning up the unnecessary user accounts and the fake user accounts and the bots and stuff like that. So that's why the user growth went down this quarter. But it is not even in the same ballpark. China has billions of people, and Weibo now has 400 million users to grow by 70 million users. I mean, that's just phenomenal. So, so far, Weibo is winning in my mind. Now, if we look at earnings, Weibo has a 49 price to earnings ratio. So for a company that's growing in the 80% ballpark, 49 PE ratio is really not expensive. I mean, Weibo is just growing like gangbusters. So Twitter, their price to earnings ratio is not so good. Last time I checked, it was a gazillion to one. So in general, that's not the type of company I like to invest in. I mean, Amazon was a gazillion to one 5 or 10 years ago, and I didn't invest in that, so I was wrong about that. But not every company is going to be Amazon in the future. So Weibo wins in that category too. So because of their tremendous user growth, their tremendous revenue growth, and the fact that they are actually earning real money, I mean, this is a real company. This is a real company that people in China use. And I already knew about the company before, but I have, since I have been talking about investing with some of my Chinese friends, they have actually mentioned Weibo to me. So, I mean, just the fact that people in America are using Weibo, not just in China, that's just tremendous. I mean, it is a Chinese company, and I couldn't understand it without a translator. I did look at the app. It looks amazing. It looks like a real company. It looks like something people would use. But since Weibo is $19 billion, which is less than the market cap of Twitter, but they have more users, they have faster user growth, they have faster revenue growth, and they have an actual earnings number. You know what I mean? They have a normal price to earnings ratio. Normal by growth company terms. So I think Weibo is the clear winner, and I think this is a great opportunity to get shares. Currently, it's about $87 a share. It did reach a high of about $130 a share last year. So I just think this is a great time to get into the company. Now, I'm not saying it won't drop more, because it could absolutely, and I've purchased companies many times before, and I buy them at $88 a share, it drops to 80, it drops to 70. I'm not saying it can't drop more, but I'm saying long term, Weibo checks all the boxes. They have revenue growth, they have earnings, they have a lot of users with a lot of new users in the future. They are going to get, they're absolutely going to get over 500 million users. I mean, the fact that they're growing revenue, growing users, I mean, I just think this is a no-brainer, and I think that if we don't get in now while the stock is $19 billion, this could be another situation like Netflix, where you know, now the company's $100 billion, and it still doesn't have too much earnings, but it's like, oh my God, there was never a good point to get in. Well, now that Weibo has dropped, I think this is the good point to get in. I think in hindsight, we're going to look back and we're going to say, wow, it was only $19 billion. It was only $88 a share. So I'm getting in now, and I'm hoping that a year or two from now, I make a video for you guys telling you about how happy I am that I invested in Weibo. So I'm thinking off the top of my head of buying 50 shares and probably one call option, with the plans of buying 2 more call options if the stock drops below $75 a share. So they get their earnings coming up pretty soon. I don't know exactly what day, but off the top of my head, it's in the next week or two. So I will be looking forward to that, and I will probably make another video on Weibo, which is actually a stock that I already own. I just own so small of an amount of it that I never mentioned it to you guys before. But now I'm getting in big time, 50 shares, 1 call option, with plans of buying 2 more call options. And I'll try to make a video in the next earnings report in a week or two. So guys, let me know what you think, if you have any money invested in Twitter or Weibo. Full disclosure, I do own call spreads in Twitter, but those are so far in the money now. I only need Twitter to go above $30 a share, which it is far, far past $30 a share. So yeah, guys, thanks for watching. Thanks for subscribing. Let me know what you think. Let me know if you're invested in Weibo or Twitter. Bye, guys.